Last week was a wild one. The nation's credit rating was downgraded, and the stock market's been all over the place. What does all this mean for the U.S. apartment sector? Well, with me to make sense of it is Greg Willett, our local Nostradamus of the apartment sector. So, Greg, you're going to reassure me a little bit, right?
Didn't I just do that a couple months ago, when job numbers started to slow down a little bit?
Well, you know I'm a Gen Yer, and Gen Yers do need lots of reassurance and positive reinforcement. So what do you got for us?
Things actually do look pretty good for the apartment industry, probably. As we look back over the last year and a half or so, a lot of the demand that has shown up for apartments has come from young adults who have gotten jobs and they've been able to move out from mom and dad and form their own households. Now, as the economy weakens somewhat, if we actually go into recession and start having some job loss, those kids could boomerang back into their parents' home, and that would not be good. But at this point, most economists are saying that we'll have a slowdown to very, very tiny growth, but not actual backtracking. That means some demand still in place, not going to be negative.
And it really won't take much demand to get things moving again, and for a couple of reasons. Number one, new apartment supply levels should remain pretty minimal, at least until the first half of 2013. And second of all, the loss of renters to home purchase, which didn't seem to be much of a problem anyway, almost certainly now won't be a problem for the apartment industry. So as a result, for calendar 2011, we're still expecting overall occupancy to improve just over 1 point. And in 2012, we should see a very similar result, maybe occupancy growth of just shy of 1 point. So really not much expectation in occupancy growth. Greg, how about rent expectations? What are you thinking?
If there is some vulnerability out there in the marketplace, it's probably more on the rent side than the occupancy side of the equation. And that reflects that there are certainly operators who are impacted by uncertainty in the marketplace and get a little bit conservative on their pricing strategies. And really, we do think that rents are going to go up, and they're going to go up pretty sharply, and particularly for new leases, they're going to go up sharply. But if there is some vulnerability, whenever I talk to operators in terms of what's happening for renewal prices, when folks who have existing leases that expire, they're not being especially aggressive in trying to raise the rents, and rightfully so. You don't want to move up the pricing so much that you lose some of your best renters. But as I talk to operators, a lot of times now the renewal price for someone who is staying in place is less than half of the increase when you've got the unit actually turning over. And that's a big difference, and it's probably too big a difference.
So overall, our mid-year forecast called for revenue growth of about 5%, maybe a little less than that in 2011, and about the same in 2012. So as we get into third quarter, at the end of that point, when we refresh our forecasts, are we looking to adjust that rent outlook at all?
I think we're still going to have a forecast rent growth right around the 5% mark in both 2011 and in 2012. We'll do a little bit of tweaking, but no big change in the big picture. If there's any real change in the forecast, it's probably going to be in what are our expectations for 2013. What we had built into the models was the assumption that we're going to have some pretty sizable loss of renters to purchase by the time we get to a couple years from now. As job growth forecasts get lowered, maybe that actually won't happen at this point. So kind of counterintuitive, but lowering the job growth expectations could in fact translate to stronger apartment demand in 2013 than what we had been expecting.
So there you have it, maybe some reassurances on the state of the U.S. apartment market. Looks like it's not going to implode, at least not yet, right?
Not yet.
So join us next time. We just talk about some of the Carolinas markets, Charlotte in particular, and that'll be a preview for our Southeast Conference coming up September 8th in Atlanta. For more details, go to mpfresearch.com to find out about that. So until then, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.